Good morning, good afternoon, good evening, traders from across the globe. Welcome to the Short-Term Trading Live with Oscar's weekend webinar. Traders, this webinar is being filmed on February 20th, 2010, and this is for the week going forward this week. Traders, what a difference a week can make, because the last couple of videos that I did for you, I was out here showing you these bear flags, if you recall, right? Expecting the market to break. Turns out that those bear flags have now morphed into bullish channels. We are back above OTAPMA of the Emini Trading Academy's proprietary moving average. A round of applause on that one, please. We are back above, traders, and we're above for like 3 days. Once you get above for 3 days, you can start buying the dips again, and that's where we stand in most of the U.S. indices. I like what I'm seeing out there. Also, the bullish channels that are forming are really nice looking, and I'm going to show you a bunch of them on U.S. and world indices on these charts in just a couple of moments. So traders, what I have to say here is it looks to me like this market basically has gone back into the buying dip mode, and if it stays like this, we're going to make new highs on this market very shortly. Strange to hear me say that, right? After a week of showing you bear flags, but bear flags are formations that are very highly accountable, and when you see them, you must trade them for what they're for, except these happen to not work. Almost always, bear flags or bull flags do work. The ones that we have witnessed grow over the last 10 days have not worked. They're getting too far, too thick, too big, and they've morphed into what I think are now bullish parallel channels. So with no further ado, because you need to see what's coming up next, let's go to look at some charts. Okay, traders, the first chart we are looking at is the leader of U.S. indices. It is the Dow Jones Transportation Average, and this is a daily bar. I want you to look at this chart closely because there's a lot happening here. First off, this line happens to be the Emini Proprietary Moving Average, or OTAPMA. We are back above the moving average, I'm glad to say. And we took out this resistance line, which was a big resistance line. So above OTAPMA, above the resistance line, and inside of this bull channel, we thought originally it was a bear flag, but it looks more like it's turning into a bullish channel than a bear flag. So we are day traders, and we chase the market down each day for what it is. The last few days, this has morphed into a bullish channel, and we are going to trade inside of this channel for Monday, Tuesday's trading. So above OTAPMA, great accomplishment. Inside of a bullish parallel channel, we love that. Takes out the resistance and settles much higher than it. Settled all the way up here. Well, actually settled all the way here. We like that. And great respect is being paid to this average. Traders, this is an average I normally will not show you. This is when I go to the big guns, when I need something that tells me the market is either going to break hard or hold. I go to another one of my Emini Proprietary Moving Averages, and once we were under it, traders, look at the respect that was paid to this average. We get above it, we have a major rally, comes back down, hits it and holds, comes back down again, the one we just seen last week, hits it and holds, and away we go. So I'm starting to see more upside coming our way. Again, if it hits it and bounces and hits it and bounces, the next step is it hits it and bounces. So I like what I'm seeing, and I'm starting to become quite bullish here again, especially because we are above the Emini Proprietary Moving Average. But there's more charts here, so stay tuned. Okay, traders, we're looking at the very same chart once again. The Dow Jones Transportation Average, deemed the leader of the U.S. indices. The same look, and as you can see, I just put OTAPMA on here now. You can see we're clearly above OTAPMA. We're clearly above resistance, but more important than that is this. March lows are all the way down here. You can't even see them. We rallied up, bounced. Rallied up again, but made a higher low. Rallied again. We did break down a couple of weeks ago into last week, but we made another higher low, and we're here already. So that's a series of higher lows in a market that is absolutely beginning to move higher once again, and did move higher for many months. So I think now that we're above resistance and above OTAPMA, and we've seen a third test of a drop that held, I think just like what you've seen here, the drop holds in the rally, here the drop and the rally, I think what we have now is the drop. We're in a piece of a rally, and I think we rally out for new highs. So imagine that within a few days of being bearish, we now have the opportunity to become bullish again. And that excites me, traders, as you know, because I want this market to go higher. I'm a bull at heart, but I can only trade the analysis that's before me. My opinion is useless. I don't use it. I use technical analysis to trade. This is what we're looking at now. Many more charts coming your way, traders, so pay attention here. Okay, traders, once again, staying with the leader, the Dow Jones Transportation Average, I have now zoomed out to a weekly bar. And the weekly bar pays a great deal of respect to my Omni average. It has for many, many years. Look what's happened here. The weekly bar, and this has been going on for months now. Since October, we've been above the Omni average. On this whole drop that we've seen these last few weeks, all we did on the weekly was come right to the OTAPMA, or the Omni Trading Academy's proprietary moving average. We came right to that average and raced out, and we're here right now on a settlement basis, traders. That's a weekly bar, and look at the resistance. Connect the last two highs, and we've broken above resistance. We've tested the old TAPMA and held, and now we're sitting up here with that V bottom. So I think we're back to the races, traders. I think we're back to the upside here. I really do like what I'm seeing. A weekly bar chart almost always will give you proper direction if you're getting a signal from it. And when you get above or below my Omni average, it's always a major, major thing. Look at this for what it is, traders. From March of last year, March of 09, we rallied all the way up until December. Finally got above the Omni average, came back down, tested it, held, and rallied right out. That means it held the average. That means it likes the buys right here, or the buyers like the market right here, and we've blasted off. If you look at how smooth this average is, it almost never gets violated. If it does, it usually means big, big down move. Don't forget this is a weekly, traders. We're looking at 2,000 points here in the Dow. That's a weekly that we're looking at, so don't get too excited when you think that's just a small move. You get under my Omni average, it's a big move. You get back above it, it's a big move. As you can see, every time you get near it. Now we're above it, we've tested it, and it held. I think we're in for a big move. I think we're going to move higher here. More and more analysis lately is starting to point back towards the upside. And I'm going to give the Dow Jones a round of applause right here, baby. Maybe our leader is going to save us and take us higher. We shall see. More charts coming your way. Let's look at the next one. Okay, traders, staying with the U.S. indices, I want to show you what the NASDAQ looks like. Once again, when we assumed that this was a bear flag because you had the flagpole and the flag building, it no longer looks that way. It now is beginning to look like this is simply a bullish channel, and that was not a flagpole. We are now above the OTAPMA and rallying out. We just hit the bottom of the channel Friday. That means it's got room to move to the top of the channel this coming week, Monday into next week. Another thing I want you to notice here is since the March of 09 lows, we rallied, bounced off the average, rallied again, bounced. Every time we dip, it's higher. Here's the dip last time. This line represents how low the dip was the second time. This line represents how low the dip was. This line represents how low the dip was. But if you notice, the dips are higher each time. So every time this market tries to pull back, it just puts a higher low in and goes up. So I'm going to go with it because we are above my Omni average, and I like what I see here. One thing we all need to be careful of, traders, continue to look at this chart. This could be, and there's a lot of analysts looking at it, like that's a shoulder, and this is a head, and this is a shoulder that's not complete yet. And if that's the case, people are saying that this would be a big top. But I've always taught my Omniacs that when you are in a bullish market, and you get a head and shoulders inside the bullish market, it usually just means continuation pattern for higher. So even though that's a head and shoulders, unless it becomes a big, huge, broad head and shoulders, a monster-sized one, I wouldn't call it a top. I'd call it a continuation pattern. So I'm not even worried if that morphs into a head and shoulders right now. I like the bullish channel we're in. I love the fact we're above OTAPMA. And I like the series of higher lows all the way up. Let's continue. More indices to show you. Okay, traders, now we are looking at the Russell 2000, one of the leaders of the U.S. indices. It certainly does lead the ES around. Of course, I think the pecking order is the transportation average is the leader, the NASDAQ's the secondary leader, the Russell 2000 is right behind it before the S&P. So one of the third leader, I should say, and once again, as you can see, in the whole move that we've had, Every time it does dip, it dips, but when it dips again, it makes a higher low. A higher low. They're represented by these red lines. You can clearly see that they're higher lows each time. Now we are back above the Omni Trading Academy's proprietary moving average, and we are in a very nicely defined bull channel, and we bounced off the bottom of that channel on Friday, leaving us room to go to the top of it Monday, Tuesday, Wednesday. That's bullish, traders. Nothing else I could say here, but we have to go back into buying dip mode, especially that we've settled above the Omni proprietary moving average for so many days. But there's more, so wait around, baby. Let's go to the next one. Okay, traders, the Emini S&P daily bar chart, the March contract, a couple of interesting things happening here. Once again, in a bullish channel, what we thought was going to be a bearish flag, I believe now is just turning into clearly, simply a bullish channel. We are back above OTAPMA, or the Omni Trading Academy's proprietary moving average. 3 days, it settled for 3 full days above my average. That makes us bullish again. Inside the channel, looking for higher levels. I like this chart now. I like the fact that we've taken out this resistance right here. We had a difficult time getting above it. Once we created that high, we came down and hit it. Couldn't get above, came down and hit it again. But this time, it breaks out. And look where we are now, inside of a very nice channel, above OTAPMA. I'm getting ready to buy on Sunday night to Monday. I hope you're coming with me. Let's see what happens next. Okay, traders, the Dow Jones Industrial Average daily bar chart. One of the things I want you to look at is you see this formation. This is what every indice looks like right now, practically. Every U.S. indice. We came down below OTAPMA, stayed down, had a decent down move, rallied back above, and now we have 3 days settlement above my average. But I want you to note what it looks like. We broke it right about here sometime in mid-Jan. That's where we broke the average and got under it. You can see we're back above it. I want you to remember this for now because I got a CRB chart coming up a little bit later that this should remind you of. So we're looking at the Dow Jones Industrial Average back above OTAPMA for 3 days, putting us in buy the dips mode. And I like what I see, traders. Now let's look forward here. Okay, traders, staying with indices, but now moving around the world slightly. We're looking at London's FTSE. We got the European FTSE here, London stock market. Again, the very same picture. You can see right around the same date we broke OTAPMA. We got under it. We're back above. Nicely back above, by the way. On Friday, took out the major resistance and is sitting in a very, very nicely defined parallel channel, which we bounced off the lows of that channel on Friday, leaving us with room to buy it down here and expecting it to get up there. So you can see how well it stayed within this channel all the way through it. There's no need to think that it's not going to continue, and you'll get your chance to buy and sell it once again on Monday the same way. Stay within the channel, buy the low of the channel, look for the highs, get out by the highs, trade it that way until it either violates the channel this way or breaks out that way. All right, traders, there is only one indice that I could find so far that I like to look at that did not get back above OTAPMA, and that would be the German DAX. Let's go look at that one. Okay, traders, German DAX daily bar chart. Clearly, and if you compare the chart, you can see it, the FTSE leads the German DAX around. The FTSE goes first, the DAX comes right behind it. FTSE is now above OTAPMA and has put in a day like this. And if you can see where we settled last is right here on the DAX. This line does not exist yet. We're just under the Omni Trading Academy's proprietary moving average right now. However, we did take out a major resistance line, settled above that line, settled within the parallel channel. I think the DAX goes above my OTAPMA on Sunday night into Monday and starts a nice big rally. So there are your European indices acting very strong now that they are above the Omni Trading Academy's proprietary moving average. Now, remember the scene that I keep showing you, all the indices that they broke the average right here and put in this formation, then got above it? Let's look at a couple more charts. I think you're going to find this exact formation show up on the CRB chart. Looks just like the indices. Okay, traders, I know I showed this chart to you when we started to get below OTAPMA with a dozen, if not 20 other charts I showed you in a video that same day. Well, now, this, by the way, is the CRB index. It's a daily bar chart. And what I've noticed is Great respect gets paid to our Omni proprietary average anytime you come near it. When it finally gets below, it has a pretty severe break. But this looks just like the formation on ES, traders. Got below it at a break, got right back above it in the exact same time frame, almost to the day. Almost to the day. Now the CRB represents a basket of 17 commodities. They all got below the average on just about the same day, and now they're all getting back above exactly when the S&P got back above and the rest of the U.S. indices, and this looks bullish, and now they look bullish. So this is a nice gauge on how to follow S&P from time to time. That would be the CRB index. Take a look at the CRB for yourself. All right, traders, the last chart I'm going to show you, or the last two charts I should say, is a weekly chart of euro currency, and then we're going to look at a weekly chart of the dollar index, and they're both pretty interesting, so let's take a look. Okay, traders, now we are looking at the euro currency weekly bar chart. This is the March contract, and what I find interesting, and this doesn't happen very often, by the way, the Omni proprietary moving average and the 200 bar moving average. And traders, we all know, all the fund managers watch the 200-day or 200 bar moving average very closely. They came together and the euro currency broke underneath very severely. This might look small, traders, but up here is 140 and down here is 134. Big, big move, to be honest with you. That's 400-point crack once we got below here. But the thing is, the rare case is that you're seeing the Omni proprietary and the 200 come together. Now, there are traders out there that call that the golden cross. They use their own average, which is the 50 and the 200. They call it a golden cross. This actually works very much like a golden cross itself, using my Omni average along with the 200. So now that you've seen in the euro that once the euro got below that golden cross, so to speak, it broke down pretty hard, 400 points. Let's go look at where the dollar index is. Okay, traders, last chart of the evening, the dollar index weekly bar chart, and look what has happened here. Omni proprietary moving average comes in, just about touches the 200 right here, and the dollar jumps up above it. Now, you recall that last chart I just showed you, the opposite going on. Euro currency got below it and had a big crack. Well, now dollar just got above it and settled right here. Dollar is likely in for a nice big rally coming up. And as you know, we've been calling bullish on the dollar for weeks now. We're continuing the dollar bullish call. Buy pullbacks in US dollar, that's for sure. And you're going to have to sell rallies in euro currency. Traders, pull your own charts. Never, ever accept anyone's opinion or trading recommendation without doing your own analysis, your own homework. Check your averages. Look for your flags. Certainly draw those parallel channels I showed you. And take a look and see if you agree with our opinion of these markets. So, traders, you've seen those charts. You see those parallel channels building. What we thought were bear flags very much now looks like they have morphed into bullish parallel channels. Of course, the thing could turn around and come back down, but you do see the action above and below our OTAPMA, or Omni Trading Academy's proprietary moving average. Usually, if you're below it, you got to sell the rallies, and if you get above it, you can start to buy dips once again. Well, thank goodness we're back above it, and we can buy dips in indices. The only fear that we really have, traders, is that if that NASDAQ chart I showed you, if that truly turns out to be a big head and shoulders that's forming in the indices, and you can almost see it in the S&P, you can see it in the Dow Jones Industrial Average, and you can certainly see it on the NASDAQ. If it does turn out to be this, we'll have to be very, very careful. But to be honest, I don't think that that's what's going to turn out to be this formation that we're building now. I think it's just going to move higher, get back into our major trend towards the upside, and blow us out of here. At least that's what the analysis is telling me now. So boy, oh boy, am I glad about that. And you see this towel in my hand? There's a reason for it. Don't fall in love with the upside. If you recall, once we started to break below my Omni average, what this used to say was don't fall in love with the downside, right? Meaning, if the market broke, go in and buy it. Don't fall in love with the downside. We had to erase it a few weeks ago and say don't fall in love with the upside, meaning if it goes up, you got to sell it because we expect lower, right? Well, hey, I'm glad to say I get to do something right now, baby, but I'm not going to go nuts yet. We're going to have don't fall in love with, and I'm just going to remove the upside And let's leave it blank for a few days. If this market does what we're expecting, we'll put the downside back on there, and it will say, don't fall in love with the downside, buy the dips, hooray, everything's back to normal. We'll see how that goes. We do take this one day at a time. As you know, traders, we are day traders. We get out by the close just about every day. We do know that our stop is our best friend. We never trade without stops. Do not place an order without putting a stop in. Put the stop in first. In case the order gets filled and you panic and it just keeps going, you never put your stop in. Get the stop in, get it in first. At least if you get into a bad trade, the stop knocks you out and you quit losing. Put your stops in. It's the only thing that'll save you. All right, traders. February 20th, it's Saturday. You have a couple of days. You got all day Sunday into Monday to do your analysis. Make sure you do it and see if you believe what we believe, that now that we're back above our average in those channels, we're going higher. I think that's where we're going. Traders, I'm glad to say this is our 550th video, baby. 550. Whoa, let's go, let's go. And we got 550 more coming your way. If you like these videos, come on down to our site. It's www.livewithoscar.com. Jump into our chat rooms and allow us to teach you how to find these formations and how to react when you do find them. All right, traders, give me a call anytime there tonight, 702-629-4755. And as always, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss.